My favorite wheel strategy stock just went on sale and I'm going all in. Here's how I'm playing it. Yo, what's going on, Premium Chasers? I hope you're having a God-blessed day. Drop a comment, and I'm going to give you 25 of my favorite Ark Options / wheel strategy stocks. Just drop a comment, no opt-in, nothing like that. And while you're down there, hit that like button and that subscribe button. Today, my favorite wheel strategy stock has gone on sale. 19 consecutive quarters of record growth, beat revenue by 27%, yet we see it dropping over 6%. This is why we hold dry powder. I always personally, for me, always like to have at least a 10 to 15% buffer on cash. If I can't, I want to make sure I have the cash elsewhere that I can transfer over in time. But this is what we've been waiting for. As you guys know, when I first started this channel, I was all about selling the options on Arista really heavily, but it's been kind of on a tear recently. But seeing a drop over 6.5% today has sparked my interest back again on this incredible company. As some of you guys know, I used to work at a high frequency trading company as an IT guy, and we were widely deploying Arista networking products. It is a must have. The stock market does not exist without Arista products. It is probably one of my highest conviction stocks, right, in my entire watch list. So when I get opportunities to sell options on this thing, I do. Of course, go do your own research on this stock. This is just my high conviction play because I do love and I do believe in Arista. We could see it now dropped 7% here at open. I always like to wait at least an hour till after open. We still have a little bit of room to run here, in my personal opinion, right? I want to see this thing at least, right, drop back down to that 137, really towards that bottom Bollinger Band area. We might not get to that, unfortunately. That's just the reality of the situation, because in my opinion, I think the buyers are just going to step in. We are only slightly oversold here on the RSI of 41, and we are still very well above the 2 and 300 day moving averages, okay? Now, we could see if we zoom out a little bit here, like a year to date, right? This is kind of where I was really, February, March, April, and into May was where I was really selling a lot of cash secured puts on this company, and it really just, honestly, all my covered calls were sold on the uptrend, which I was, totally fine with. I didn't care, but man, that was so fun. And now I'm starting to see that opportunity. Not as good, obviously, unless it continues to drop, which would be fantastic. But this is why we're seeing kind of almost the kind of skewed numbers on the 2 and 300 day moving averages. Obviously, this drop back that happened here in that February-ish time frame was all kind of wrapped up around the insider trading side of things. But with that said, 19 consecutive quarters of record growth, 27% growth year over year, and still takes a big tumble because it missed on EPS just slightly. That to me is a screaming opportunity. Let's go take a look at the options chain. Now, if you don't know what a cash secured put is, it's basically me saying I'm willing to buy Arista, 100 shares of Arista at a certain price and date, okay? And that's how I like to sell options. Whether I might love Arista, and I do. I love Arista, but it doesn't mean I need to buy it, right? I'm just trying to eliminate that one risk of as an option seller is getting stuck holding junk. In my opinion, Arista is not junk. So if I get assigned it, I'm going to be happy, right? And whatever your watch list is that you build over time, right? You're going to have those high convictions as well, hopefully, right? As long as you're not just blindly following stuff. Like I'm talking about Arista, but you got to go talk about whatever it is that you're passionate about. And I think you see that through me with Arista. That's like I was used to be when I was working in that IT sector. I was very heavily invested, very heavily deploying Arista products, and man, even compared to Cisco, bro, I love their interface and stuff like that on actually deploying the actual products. I digress. Here's how it works. We go to the options chain. And what we're doing is sell a put. All I'm saying is I'm willing to buy 100 shares of Arista on a certain date. Let's go out to December 5th. That's going to hit us right at our 30-day mark, right? So I'm saying I'm willing to buy 100 shares of Arista on December 5th, and I get to name my price for that. Obviously, at the time you're recording this, we're just down 6% right here at the open, and we're trading around 144. I'm looking for listen, Greeks, technicals, yada, yada, bing, bong. I don't care. I care about one thing only, guys, and that is my ROI on my collateral. With a cash secured put, we are locking up our collateral, right? So if, for example, we did the 140s, I'm locking up $14,000. Okay, 140 times 100 is 14,000. We got this, guys, right? Now with that, and if I did the 140s just for the sake of this example, one contract is equal to 100 shares. Okay, that's 100 shares. Okay, so again, that's just the way the rules are. One contract equals 100 shares, and so 140 times 100 is your 14,000. I like to toss everything into my cash secured put calculator to keep myself organized. My trade log, cash secured put, covered call calculator are all available for free at the end of the Ark Options Strategy workshop. That will be the second link if you want to grab this all free. So I teach you how to use this stuff, and then I give you the resources for free to actually go deploy this strategy for yourself. So in this specific example, we'll talk into a little bit what the ideal strikes are. I'm collecting $560 of premium upfront. This is given to me from a silly little options. A buyer, the holidays are coming around. We're going to send them some Christmas cards. So $560 of premium we're collecting upfront from the options buyer. Now, again, we're locking up $14,000 for this trade with a fantastic, juicy 4% ROI on collateral gold. Now, to me, this is too aggressive. Even for me, even though I love Arista, I'm team Arista, right? For me, this is too risky, right? Now, because at the end of the day, look, we all have to assume we're going to get assigned when we're doing a cash secured. When you click that order and you're like, boom, I take it. Assume you've been you're being assigned. Assume it. That's one, like, truly, because a lot of people, they just don't want to get assigned. They're scared. Now, you can mitigate that risk, right? So how do we mitigate that risk? Well, we go down to a strike price. Honestly, this is the way I like to even do it, is sometimes I won't even look at the Greeks. I'm just looking at what's going to give me my ROI on collateral first. Like, that's what I want to see first before I go look at the delta and stuff, right? I want to see what is that ROI on collateral. So if I go down further, let's say, just for simple math, let's say the 134s, right? Now, if I open this up, I obviously can see the delta here is about a 0.28, which is a 20-30% chance of assignment, 70% chance of not getting assigned, right? And that's usually where I like to be on high conviction stocks. I usually like to be around that 30 delta. Even if I do the 135, see, that's a 30 on the dot right here. So I'm collecting 420 of premium here. Let's see what that does to our actual premium that we're collecting. So this, we're locking up a little less, $500 less of collateral, but now we're getting a return of a 3%. So still, in my opinion, slightly a little bit more risky than what I'd actually want to do, right? So I would just be looking further. Now, I'm not only going to let the delta decide for me what I want, right? I'm not going to do that. I'm going to look at primarily my North Star. My North Star is always, how am I making my money? That is why I'm doing this, right? Like, if I'm trying to preserve capital, right? I'm trying to preserve capital, but at the same time, make my money work as hard as possible for me, right? Like, that's my goal, right? With all of this, right? So even if I look, let's say 130s, right? Now 130s, I'm collecting 195, right? 195. On this, drastically lower, right? Drastically lower, but I'm only locking up 13,000, and that's giving me a 1.5%, a lot less likely of an assignment because it's not as risky of a play. And you could see this is only 0.22 delta, right? And this is where you kind of start making your own thesis about this, right? And this is where you start to think like, okay, do I actually want to get assigned? Do I not mind getting assigned? Do I want to play it a little bit more risky because I actually want to own this thing and I'm really, really bullish on it? Or do I kind of just want to play it a little bit more safe and just hit that ROI collateral goal that I have for myself? And that's where you have to make those decisions for yourself. And you only do that by doing this for long periods of time and gaining experience. For a company from me, like that Arista that I love so much, I am going to be a little bit more aggressive because I don't mind assignment on a stock like this. This is a stock that, to me, I have the high conviction of like, hey, if I get assigned at, let's say, let's just say if we did the 135s, right? Because there's a huge premium jump here, right? If I did the 135s, am I comfortable owning this at 135? Well, yes. Why am I comfortable saying that? Well, because I believe I'm bullish enough on it that I do believe it's going to hit all-time highs again, and I'm going to be able to do my covered calls on this if I get assigned for a great strike price, right? And I have, again, very high conviction in it. So this being a 0.30 delta, that's kind of my sweet spot for this, even though it is way more of a chance, in my opinion. Now, listen, look, some people will be like, oh, delta is the kind of the number to look at the probability. No, to me, dude, I look at the ROI on collateral as my risk. Like, I look at ROI on collateral as my risk. I'm not like that's what I'm looking at, right? So in this specific case, right, I'm hitting that a little over a 3% ROI. Obviously, not financial advice. Results vary. This is just the premium I'm seeing at the time of recording this. This is the premium divided by the collateral, right? But for me, in this educational example, me personally, I would take this trade over it because, again, I'm being a little bit more aggressive with my money, right? I want to actually own Arista so I can run covered calls on it, and it's a company that I believe can hit all-time highs. Now, if you are somebody that say, you know, Pete, like, I actually want to buy Arista on this dip for 144, like I genuinely actually want to just buy the dip. Well, you can do that. So in that strategy, what you can do is obviously you can go out there and buy 100 shares at the current price. That's not a problem. But what I like to do is I'll do weeklies or as close to the next expiration that I can do. So in this case, I have 2 days, right? And let's say I actually want to own it at 144. You're going to still pay me. You're going to pay me to take that risk. So in this specific case, I genuinely want to own it. And that, of course, could maybe not happen. Of course, there's chances of it, but I'm still, what I would do is go to my next closest expiration, like this one being November 7th, and I would sell a put on the 144s. Now that's obviously basically right at the money on this, but look, I'm collecting $300 of premium right now. If I toss this into my cash secured put calculator, 344, I'm locking up $14,400 for the next 2 days. Look at this. I'm getting an ROI on my collateral of 2%. Right? That's the premium divided by my collateral. Plus, if I get assignment, I'm getting the strike price that I wanted as well. And you can almost kind of look at this premium. You can factor it into your cost basis. So essentially, this is just about getting 2 shares extra, kind of free when you're running, when you're doing this strategy, right? And that's kind of how I like to sell options, especially when a stock is plummeting and it's a company that I genuinely want to get into. Now, obviously, there's the chance here that it's going to be above 144 in 2 days, and that's just, you know, it's a missed opportunity. But still, right? You hit your ROI on your collateral goal, and guess what? This is the stock market, and there's opportunities everywhere to put your money to work. If you want to learn more about this strategy and how you can implement it for yourself, click that second link in the description of today's video. I'm going to give you my full trade log plus all my cash secured put calculators plus a 2-hour training on the Ark Options Strategy, which takes the leaky wheel strategy bucket to the next level by combining 5 sources of income into one simple strategy that literally you can do in 15 minutes a week. Remember, guys, sell options, collect premiums, repeat. I'll see y'all tomorrow.